Bitcoin. Just saying the word brings up these crazy images, right? Wild price swings, people becoming millionaires overnight, and these absolutely devastating crashes. And honestly, that volatility, that's what scares most people away. But what if that fear is based on looking at it from the completely wrong angle? Today, we're going to dive into some ideas from Anthony Pompliano and see why Bitcoin's biggest perceived weakness might actually be its most misunderstood strength.
All right, let's just get right into it. There's no sugarcoating this. Bitcoin's price moves in ways that can be absolutely gut-wrenching, especially if you're used to the, let's say, calmer waters of traditional finance.
I mean, to really put this in perspective, think about the stock market. A drop of just a few percent and you've got news anchors talking about a market crash and widespread panic. For Bitcoin, a 10% drop, well, that can be just a regular Tuesday.
But it goes way beyond that. We've seen times where the price has dropped by a staggering 30%. Just imagine a third of your investment just, poof, vanishing. For a lot of people, that's the moment they hit the big red panic button and sell everything.
And it gets even more wild. A 50% drop has happened more than once. We're talking half of your money gone in a pretty short amount of time. You can absolutely understand why that creates a massive amount of fear.
And at its most extreme, Bitcoin has seen drops of over 80% from its peak. So yeah, it's pretty easy to see why, if you're only looking at these numbers, most people would just say, no way, that is far too risky for me to ever touch.
But here's the argument. Focusing only on these insane drops is like looking at one chaotic, blurry frame of a much, much bigger movie. To really get what's going on, you have to zoom out.
If you're that person who's checking the price every hour or even every day, this is what you see. Pure chaos. It's a roller coaster of constant ups and downs that feel totally random, and let's be honest, it's guaranteed to make you stressed out and make bad decisions.
But the second you stop staring at that daily noise and you pull the chart back to see the last few years or its entire history, a completely different picture starts to form. In spite of all those huge crashes we just saw, the overall direction has been pretty consistently up and to the right. So this is really the key takeaway. For someone who's in it for the long haul, the day-to-day or even week-to-week volatility just doesn't matter as much. The only thing that really counts is whether that long-term trend of adoption and value is still pointing up. Okay, so how do you actually use this idea? I mean, instead of going all in, which is terrifying, what happens if you just add a tiny little slice of this volatile thing to a super traditional conservative investment portfolio? Well, let's look at the numbers from a 5-year period between 2015 and 2020. Your standard 60-40 portfolio of stocks and bonds, it would have given you about a 7.2% return each year. Not bad, but look what happens when you just tweak it a little bit and put only 1% into Bitcoin.
The results are kind of shocking, right? That tiny 1% allocation pushed the average annual return all the way up to 9.2%. That's a full 2 percentage points higher, which, thanks to compounding, makes a massive, massive difference over time, all from that one tiny slice.
And this right here is a perfect example of a powerful idea in finance called asymmetric upside. Think about it. In the absolute worst-case scenario, if Bitcoin completely fails and goes to zero, what do you lose? You lose 1% of your portfolio. But the potential reward, as we just saw, was an extra 2% in returns every single year. The potential gain is just so much bigger than the potential loss.
So that leads to the big question. Why does this long-term upward trend even exist? It's not just random luck. The argument is that it's all about Bitcoin's nature as a new layer of technology, built on top of other technologies that took decades to build.
Think of it like this. The internet was able to spread like wildfire because it was built on the existing telephone network, right? It didn't have to lay its own cables across the globe. Well, in the same way, Bitcoin is a monetary network built right on top of the internet. It's leveraging all that existing infrastructure, which allows it to be adopted globally at an incredible speed. And we're literally watching this adoption happen in real time. This isn't a theory anymore. You've got major public companies putting Bitcoin on their balance sheets. The biggest banks in the world are opening up crypto services. You even have entire countries making it legal money. This growing network is the engine that's driving that long-term trend.
So, when you put all of this together, the long-term view and the real story of tech adoption, you can start to see those scary price drops we talked about in a completely new light.
A short-term speculator sees a 50% drop and they freak out. They see their money disappearing and they sell, locking in a loss.
But the long-term investor, the one who believes in the technology and sees that multi-year trend, they see the exact same 50% drop and think, awesome, the thing I want to own is on sale. It completely flips from a crisis to an opportunity.
And that kind of leaves us with one last big idea to chew on. Maybe this crazy, intense volatility isn't a flaw. Maybe it's not a sign that something is broken. Maybe it's just the price of admission you have to pay to get in on the ground floor of what could be the next huge shift in technology and finance.